DoorDash just released its Q4 2025 earnings report, and if you still think it's just a food delivery company, you may have to take a second look. In Q4 alone, Marketplace GOV surged 39%. Revenue climbed 38%. GAAP net income jumped 51% year over year. But the real story isn't just growth. DoorDash is rebuilding its entire technology infrastructure. DoorDash, Wolt, and Deliveroo into one single platform. The questions for investors after this report is simple. Is this the beginning of a global commerce engine, or are early signs of margin pressure showing up in 2026 guidance? Let's start with what matters. Analysts estimated DoorDash to report 58 cents of earnings per share. However, DoorDash reported 48 cents, a miss of 17%. In addition to EPS, they also missed on revenue. Analysts projected $3.99 billion, whereas DoorDash reported $3.955 billion, a miss of 1%. Despite this, EPS was still up 45% year over year, and revenue was up 38%. Total orders hit 903 million, up 32% year over year. Even excluding Deliveroo, orders grew 20%. That tells us core demand remains strong. If we hop over to fiscal and we add in the total revenues and the total revenue change, you could see just how quickly DoorDash is growing. In December of 2022, DoorDash had $6.5 billion in revenue, and now they are at $13.7 billion, doubling revenue in 4 years. If we take a look at gross profit, you can see that this is also consistently going up each year, up 34.7% since last year. GAAP net income hit $213 million, up 51%. DoorDash also uses this term Marketplace GOV in its earnings reports a lot. But what does it mean? Marketplace GOV, or gross order value. Marketplace GOV represents the total dollar value of all orders placed on the platform before DoorDash takes its cut. Think of it like this. If you order $50 worth of food, that full $50 counts towards GOV. DoorDash only keeps a percentage of that as revenue. So GOV measures transaction volume, customer demand, and performance scale. In Q4, Marketplace GOV hit $29.7 billion, up 39% year over year. Even excluding Deliveroo, GOV grew 35%. That is significant because GOV tells you whether the platform itself is expanding, independent of accounting adjustments. DoorDash exited the year with 56 million monthly active users and over 35 million paid members across DashPass, Wolt Plus, and Deliveroo Plus. Membership here is critical because if you're a member, you're going to order more through DoorDash. So that increases order frequency, customer retention. You're not going to buy the DashPass and then go ahead and order through Uber Eats. You're going to stick with your DoorDash membership. It also adds pricing power. DoorDash can offer members exclusive discounts and predictable future revenue. These are monthly subscriptions, so it makes it very easy for analysts and the company to track this into the future. So for these members, it's no longer a one-time app transaction, it's a subscription-driven marketplace. That's why the 25 to 30% GOV growth matters, because it reflects engagement, not just random spikes. On October 7th, DoorDash completed its Deliveroo acquisition. So the management team is now managing DoorDash, Wolt, and Deliveroo. Before we dive deeper into the integration, let's clarify what Deliveroo actually is, in case you missed those headlines. Deliveroo is a UK-based food delivery platform operating across Europe, the Middle East, and parts of Asia. It was founded in 2013 and became one of the dominant food delivery platforms in places like the United Kingdom, France, Italy, and the United Arab Emirates. Think of Deliveroo as a European equivalent to DoorDash, connecting restaurants, riders, and customers through a marketplace model. Like DoorDash generates revenue by taking commission on order, charging delivery fee, monetizing advertisements, and subscription. Deliveroo expands DoorDash's footprint to over 40 countries, where DoorDash previously had a limited presence. So this isn't just an acquisition for growth, it's an acquisition for global scale. So why is that important? Because operating these three separate businesses on different code bases is inefficient. A single platform allows shared engineer teams, unified data systems, centralized AI models, faster product development globally, and overall a cleaner picture for the company. Deliveroo contributed over $45 million to Adjusted EBITDA in Q4. However, Q1 guidance suggests lower near-term contributions as they invest in the integration. This is a strategic consolidation year. If executed properly on the platform, this shift could improve future long-term operating leverage. Now let's talk about where growth is evolving. In December, 30% of US monthly active users ordered from grocery or retail categories. That's a major shift considering DoorDash is normally known for ordering from restaurants. So DoorDash is expanding beyond the restaurant industry by delivering into grocery, retail, alcohol, and convenience. Currently, grocery margins are less than restaurants, but management expects unit economics in grocery and retail to turn positive in the second half of 2026. If that happens, it meaningfully expands long-term margin potential. That is arguably the most important catalyst over the next 18 months. Let's address the 2026 guidance. Marketplace GOV is ranging from 31 to 31.8 billion. Adjusted EBITDA is between 675 and 775 million. That's a slightly softer sequential EBITDA compared to Q4. For that, management cited three reasons: approximately $20 million in severe impact from storms, higher Dasher costs due to seasonality and regulatory markets, and increased investment in the Deliveroo integration. They also expect 1.3 to 1.4 billion in stock-based compensation and 1.1 to 1.2 billion in depreciation and amortization. Diluted share count increased to 433 million to 443 million year over year, about a 2 to 3% dilution. Additionally, a $5 billion stock buyback has been issued. However, no shares have been repurchased yet. That capital allocation decision will be important to monitor. Adjusted EBITDA for Q4 was $780 million, up 38% year over year. EBITDA margins as a percent of GOV is around 2.6%. That may appear modest, but remember, this is 2.6 of nearly $30 billion in quarterly transaction revenue. Small efficiency gains scale quickly. Today, DoorDash is completely different than it was a few years ago. It is GAAP profitable, expanding internationally, scaling subscription revenue, and building a unified global platform. The two things that matter most going forward from now are a successful Deliveroo integration and grocery margin turning positive in the second half of 2026, if not sooner. If those execute, this transitions from a delivery company to a globally scaled commerce infrastructure platform. So now I want your perspective. Are you holding through this integration cycle? Drop your comments below. If you want more data-driven earning breakdowns, hit subscribe. If you want to see how this compares to something like Amazon's latest report, click the link in the description below. I'll see you in the next one.